Hello, my name is Kevin and welcome to my channel. This is the Compulsive Investor channel. Here we talk about business systems in real estate. If you like what you see in this video and would like to keep learning more, please like and subscribe down below. That way you'll be sure to not miss out on any of my future videos. Just a heads up, in the next several months I'm going to be creating an online course where I'll be detailing all of my business systems. In this course, you'll get all of my standard operating procedure documents, my Excel sheets, and all that comes with that. I will be giving out more info about this in the future videos. Now, let's get started. Why is real estate investing so profitable? If you want to understand why, then this here is the video for you. Now, I'm going to add a caveat here. I am not a tax attorney. I only play one on the radio. No, seriously. So be sure to talk to your tax accountant before implementing any of this information. Why is real estate investing so profitable? Well, one reason is because investors pay little or no tax. Now, I may get some angry comments down below because of this, but you can do one of two things. You can either complain to your state representatives who own real estate and maybe ask them to tax real estate investors more, see how far that gets you. Or you can, too, learn to play by the rules that they've created. Why not buy a couple rental properties and just see what happens to your taxes? How about taking a look at your pay stub? Take a look at how much tax you paid on that pay stub. How would you like to have all of that tax back? What would you do with it? Would you buy a big screen TV or would you buy a rental property? You see, this is what the government wants you to buy, and it rewards you for doing so. There is a housing shortage in this country. People need affordable housing. Not everyone can afford to buy. Not everyone is in the position to buy. Banks won't loan on distressed properties. The government understands the mindset of an investor. The government knows that investors will buy distressed properties. They will create affordable housing. They will remove distressed properties with boarded up windows off of the city streets. Now here's a key point. The government uses tax incentives to encourage people to buy rental properties. Let's take a look at camera 2 and we'll see how this all works. Now this is an oversimplification for demonstration purposes only. Now if you stick around to the end of this video, I'm going to show you why this card is my favorite credit card. And I'm even going to show you how you can buy a house with a credit card. So stick around. In this video, we're going to talk about 3 different groups of people and how they're paid: the employee, the self-employed, and the investor. First, let's take a look at how the employee is paid. The employee gets his money from his employer, and before he even sees it, taxes are removed from his income. So let's put this over into the tax department. And with what's left, he pays for his housing, his car payment, utilities, he buys groceries, and then he's finally able to put a little bit into savings and have a little bit of fun. Now let's take a look at how the self-employed is paid. The self-employed person has a few advantages over the employee. Before he's even taxed, he's able to take some deductions. He deducts his car payment, some computer equipment, his cell phone, and he gets what's called the home office deduction. And he can deduct 20% of his housing, including his rent or mortgage, property taxes, insurance, and utilities for his personal residence. So because of these deductions, he's actually taxed on less money, but because of what's called the self-employment tax, he ends up paying more tax. So we'll move this over to the tax department. If you notice, there's a common denominator involving tax. He buys groceries, and then he's finally able to put a little bit into savings and have a little bit of fun. Now let's take a look at how the investor is taxed. An investor has rental properties. These properties produce cash flow. Now before he pays any income tax, he pays all the expenses that are incurred by those properties. Property taxes, insurance, repairs, maintenance, capital expenses. Then after he pays all those, then he takes the same deductions that the self-employed person takes. He deducts his car payment, maybe some computer equipment. He also gets the 20% home office deduction, which includes all expenses related to his housing. Now here's a key point. Because he has created what's called passive income, he is taxed at a lower rate than the first two groups of people. He can also control how much income he reports on his tax return. For instance, he may want to apply for a loan, so he's going to want to show more income in this case. So he may stop there and pay his taxes, and then take what's left and buy his groceries and his personal expenses, have a little savings and some fun. Or he may do what I usually do and put all of that income back into my properties by doing more renovations, upgrades, extra repairs and maintenance. So he may end up with reporting $0 on his tax return, or maybe even a negative amount. But now wait a minute, Kevin. How do you pay for your groceries, your personal expenses, and your fun? Well, pay attention, because here is where the magic happens. I'm going to take one of my rental properties on King Street that I own free and clear, and I'm going to mortgage that with a lender. I'm going to do a refi on that property. Now, the lender is going to give me a large sum of money because of that refi. Now, here's another key point. If you get nothing else from this video, remember this. There is no tax on debt. So you have just created tax-free income that was created from the equity in your rental property. Now you're going to buy another rental property that needs to be rehabbed, a distressed property. You're going to fix it up, maybe put some new windows in it, do some repairs. You're going to fix that property up, and then you're going to run it out and create more cash flow. Then you're going to buy your groceries, your other personal expenses, and then you're going to spend the rest on fun. And this is what makes real estate investing so profitable and powerful. In my next video, I'm going to talk about alternative financing. I'm going to demo my favorite Bank of America card, and I'm going to show how I received a $35,000 credit limit on this card. I'm also going to talk about how I get 3% financing on this card. That's better than you can get at most banks. Where I invest at, you can buy properties for under 30 grand. So you can actually buy a house with this credit card, and I will show you how to do that. I will also demo some of my other favorite cards that I use. So if you got anything from this video, please hit the like button down below and subscribe so that you won't miss out on this next video.